So this is just going to be a very short show tonight with a quick update. Normally the Fed's official balance sheet comes out every Thursday for the Wednesday of each week. But this week we obviously had here in the United States the Thanksgiving holiday, so that schedule was shifted a little bit. The Fed's official balance sheet came out yesterday on Friday, November 29th, and I already had an interview planned, so I did the math, and the Fed's balance sheet is up again this week. It's up about $20 billion after being, I would call it a bump in the road, down $17 billion the week before, which was a bit of a surprise considering some of my friends, like my friend Wayne, who emails me the Repo Madness calculations that he's doing. He wrote a program to track the New York Fed data with the term repos and the overnight repos. And he has very similar numbers to Jim Bianco. Wayne was actually predicting $61 billion increase in the Fed's balance sheet this week, and the increase was only $20 billion. So Wayne was very confident that it would be about $61 billion, give or take. So the Fed may be playing games, maybe waiting for next week or the week after to increase it even more than that. There's, according to Wayne, about a $40 billion discrepancy here of what the Fed should have added. Remember the first 42-day term repo, that's $55 billion, kicked in a few days ago, earlier this week. So now, in only about 3 months, almost exactly 3 months, the Fed's balance sheet is up $292.93 billion officially. So that's way more than the not QE program of $60 billion. They told us that Repo Madness was only temporary, that it would not add at all to the balance sheet. It clearly is a lie. The pace of the balance sheet growth, of the Fed's official balance sheet growth, is almost $100 billion per month. Not there yet. We will. We're going to be $100 billion per month in the near future. Perhaps as soon as next month. It's going to be $100 billion per month pace. Because Repo Madness is not showing any signs of slowing down, according to what Jim Bianco is saying. So I know people have some disagreements with Jim Bianco's numbers, but remember at the end of October and early November, there was a New York Federal Reserve speech done by a vice president at the New York Fed, and she said in the speech directly that Repo Madness, if you add in all the overnight repos and the term repos, if you add all that stuff in, that Repo Madness was averaging, her words, not mine. I did a show on this as soon as the speech came out. Props to David Kintieri at Money GPS for finding this on the New York Fed website. Her words, not mine. Repo Madness averaging $190 billion per day. And that was before the term repos kicked in, the new term repos. Remember, these repos are all being layered. So you have the overnight repos, which are supposedly, according to the last press release update on those, at least $120 billion per day. Maybe they're not all being oversubscribed. But where the big growth has been in the repos for Repo Madness is in the term repos. So you have all these new 14-day term repos. They added additional 14-day term repos, and they increased the size of the 14-day term repos. They were initially small. And these ones are not all rolling off the Fed's balance sheet. They're clearly, some of them, being permanently rolled over. So the size of the 14-day term repos, the amount of term repos being offered to different banks has increased. The size of the 14-day term repos has been increased. Now you have the first 42-day term repo that's kicked in. You have another 42-day term repo that's supposed to kick in, I think, first week or first 10 days of December, along with the 28-day term repo that's supposed to kick in the first 10 days of December. And all these term repos are all layering on. They are not all rolling off the Fed's balance sheet. Now, they're not all going directly, at least not yet, officially onto the Fed's official balance sheet. Otherwise, the Fed's official balance sheet increase would be a lot more than almost $300 billion in only 3 months. But it's still a substantial increase. But the Fed is also playing games. They do reverse repos too. So they try to take liquidity in and out of the system. So repos are trying to put liquidity into the system to banks, where banks, God knows the type of collateral that banks are offering. We won't know without a real independent audit. So it's almost definitely not all good collateral. with only U.S. Treasuries, and they're already announced publicly they're taking mortgage-backed securities, and they consider mortgage-backed securities good collateral. But guess what? Mortgage-backed securities blew up in the repo market in 2007, 2008, and that led to TARP, and that led to QE. The mortgage-backed securities, which were good collateral back then and were valued at 100 cents on the dollar, all of a sudden they were accepted for years as good collateral. They started turning from an asset into a liability, and they started becoming very, very bad, toxic collateral. Thank you, Ricky, for the kind words. So we'll have to monitor this to see if the Fed's balance sheet increases continues at the pace. The not QE program of $60 billion per month is a total BS. But Jim Bianco is saying that Repo Madness is averaging $300 billion per day now. And when the New York Fed speech, the vice president's speech, came out on November 4th, and she said it was $190 billion per day, Jim Bianco had slightly higher numbers. I think it was in the low to mid 200 billion. So he was slightly higher, and he said it was from multiple websites on the New York Fed, that they were hiding additional things on other parts of their website. That's what he was saying. Maybe I could get him on for an interview. He's a pretty big shot, so I'm not sure if he would be willing to come on a podcast, but I've been reaching out to him on Twitter. I'll see if I can get him on for an interview. So again, just a quick update on the Fed's balance sheet. The trend has started to increase again. It's not the big increase that my friend Wayne, who wrote a computer program to track that website that the New York Fed updates. It appears that the New York Fed may have a couple other websites with some other information on there, and that's where Jim Bianco is going from. I think Jim Bianco is going from more than one website on the New York Fed. He said all of his data is from the New York Fed, but I believe that he's going from not just the main website, because the people who follow that one main website keep hitting the reload button, and someone was complaining about all this in a podcast a couple days ago or in the comment section, that those numbers don't add up. But I think there's a couple other pages with some information where Jim Bianco is also finding it. And again, Jim Bianco has a track record of these things and tracking for the bond market and global macro. He has a long track record of tracking data, this data and other data. So I think he's a pretty reliable source for this stuff. And it's so as good as that website that the New York Fed put up, it seems that they're playing games, and there might be other websites on the New York Fed website where they're hiding other term repos and other things. But I was going to do a crazy little musical here where Repo Madness is essentially like the Hokey Pokey. It's like the Hokey Pokey, and like you put your left repo in, you pull your left repo out, you put your left repo in, and you shake it all about. You do the Repo Madness, and turn yourself around. That's what it's all about. And then like putting your Repo Madness in, you put your you pull your reverse repo out. Maybe I should make a parody about that. Maybe I should, instead of the words for Hokey Pokey, maybe I should do Repo Madness and then talk about repo and reverse repo like that in a Hokey Pokey song format. That would be pretty funny. That's how comical everything's getting at this point, anyway. Well, that's weird. The stream is freezing up. I should probably end it now anyway. So the pace we're looking at is just under 100 billion per month for now, for the Fed's official balance sheet increases. Again, I want to thank you to my over 200 Patreon account contributors. Hopefully people will stick with me and allow me to continue to invest in my business. My dozen or so monthly PayPal contributors, and people throw me a tip once in a while. It's much appreciated. I can focus on content like this, doing research, analysis, information, and education like you probably won't get on other YouTube channels. Okay, that is really weird. It's not loading right now. Everything's freezing up on my screen here. RR says laugh instead of cry. Yep. Yep, the way the Fed plays games with repurchase agreements or repos and in reverse repos, they're pulling all these levers. It's really bad Keynesian economics. They're pulling levers like crazy, where they put liquidity in and then they panic and they try to pull liquidity out. It's ridiculous. It's absolutely ridiculous. As Bryce Harper would say, it's a clown show, bro. Or clown question, but I think clown show is better. I think he made fun of a reporter and called it a clown question. It's more like a clown show at the Fed. But yeah, I feel like the way the Fed does with the liquidity with repurchase agreements and reverse repos, it's like the hokey pokey. But with our finance, it's this bad Keynesian experiment with our finances at stake. Anyone know what? This is a good question by Sunny. Anyone know what the Fed did with the 2008 toxic assets? So initially they could not sell them, and then they allowed private equity like BlackRock, Blackstone, hedge funds to buy this stuff with more free money. So they were allowed to gamble on the mortgage-backed securities and other toxic assets, and also buy entire rows of houses in Las Vegas for a couple years. They were allowed to buy this stuff with free money. So the Fed created even more free money out of thin air to give to large private equity companies and hedge funds to gamble, because the Fed didn't want to hold it all. So the toxic assets, the Fed is not holding all of them. The Fed was able to sell some of them by bribing private equity and hedge funds with free money. There's a ton of articles about this that have come out in the last 10 years about how private equity was buying entire rows of houses in Las Vegas, like entire empty communities. Yeah, the Fed did that. For the first couple years, no one would buy any of the toxic assets, so the Fed had to offer many billions of dollars in free interest-free loans to gamble on them. Again, the Fed doesn't help anyone on Main Street. The Fed only helps the large Wall Street banks, hedge funds, etc. Well, when the CLOs go bad, I'll do another show on this, but the Bank of Japan a month ago, I saw this, caught this in a Danielle DiMartino booth interview. She mentioned this. The Bank of Japan is really worried because the largest Japanese banks are the largest holders of CLOs. So I'll do another separate show on this. Japanese banks own a massive amount of CLOs, desperate for yield. On top of that, you have what SoftBank has done. SoftBank has issued massive amounts of debt, many billions in debt, from yield-hungry Japanese investors through their baseball team. They run a lot of ads at the baseball team that SoftBank owns. I can't remember the exact name of the team. And so they issue debt, and the Japanese yield-hungry investors for now are guaranteed debt, but that might be a default in a couple years. And then SoftBank takes that capital they raise from the debt issuances, and then they gamble on these Silicon Valley unicorn Ponzi schemes with the debt, with the capital they raise from issuing more debt. That is not a solid business strategy. That's leveraging the balance sheet up, even though they're issuing the debt between 1% and 3%. Thank you for the super chat, Penguin. Appreciate it. Glad you really like my work. I haven't looked heavily into that merger yet. If the gold price goes high enough, as of right now, this is just my opinion for now, I have to look into the details more. If the gold price goes high enough, it's a good deal. That mine, I haven't looked at the grades yet and the economics, so I can't tell you if that mine is economic at current gold prices, if the Detour one is. But a lot of people think it's, the mining experts I follow on Twitter and some of the articles I've read, think it's, I do my own research on this too. So I that's why I'm not offering my full opinion on this. That the mine for Detour is high capital and low grade, and it only makes sense at a higher gold price. This also answers the question that Fosterville may not have decades of high-grade reserves left, as management was stating for the last year or so. Now, I would have to look into this more. What I may do, Penguin, then, I was thinking about doing this for an added bonus. I was thinking about looking through the financials and putting like another audio podcast behind the paywall on Patreon, similar to what I did for my patrons with the large rumor for the Oyo Tolgoi gold stream that Franco-Nevada was looking at. That's the big rumor going around, that it could potentially be the largest gold stream in history. So I may do that in the next week or two. I'm thinking about it. But that would be an added bonus for paid Patreon account contributors. You'd get a podcast like that. With looking through the balance sheet of Kirkland Lake doesn't have any problems as of now with their balance sheet, but I haven't looked at the exact details in a while, but I don't think there's a problem with their balance sheet. But with these, the problem with the mining industry is normally when you're building a new mine, it almost never comes in on time and on budget. It's a rarity. And when there's big cost over Osisko Gold Royalty, now that they're not a full royalty and streaming company, they may learn this the hard way, because they paid about $300 million for Barkerville Gold, and then it's going to cost them another about $300 million, and that's if the feasibility study is not much larger than the pre-feasibility study. There's not big cost discrepancies, and the mine comes in on time and on budget, building the mine and running the mine. So Osisko Gold Royalty shareholders are looking at $600 million in payback for the capital before they get a positive return. Off the top of my head, I don't know why the trading volume is. You have to look at the float. William, you have to look at the total float. So how many total outstanding shares is there of stock, and how many shares trade on an exchange, and then and then it's like volume of shares relative to total shares, and volume of shares relative to publicly traded shares. Like Mavericks Metals, for example, Mavericks Metals is a royalty and streaming company. They're substantially smaller than Sandstorm Gold, but they have a pretty bright future if management can execute, although they're starting a dividend, I would say, too early. If people need income, they're going to like that it's starting a small dividend, but a company that has a little over 25,000 gold equivalent ounces per year for a royalty and streaming company probably should be looking at doing more deals in this environment when the miners are still capital starved and cannot raise significant amount of capital, rather than starting a dividend now. But that's just me. But anyways, Mavericks Metals does not have a lot of their shares trading on an exchange. They have a very low float. So that prevents a lot of downward pressure on the stock price for Mavericks. Okay, well, that's it for right now. This screen was freezing up for some reason on the program. I don't know why. I don't have that many windows open. I only have 2 or 3 other windows open, because this is just a short show, and I was just talking about the Fed's balance sheet increase. It is clearly up substantially since the end of August. Repo Madness was not supposed to add to the Fed's balance sheet. Remember, they were lying. Jerome Powell and other Fed chairmen were lying to us constantly, starting in September when Repo Madness was announced. Jerome Powell lied to the congressman, the House of Representatives member from Texas who asked him about repo, because not QE is only $60 billion per month. So either not QE is much larger than $60 billion per month. The Fed is also taking the mortgage-backed securities that are expiring, that they collected interest payments on, and their portfolio mortgage-backed securities is declining, at least officially. Although the Fed is taking mortgage-backed securities, a lot of them, as quote-unquote good collateral for Repo Madness, but those are not officially being added to the Fed's balance sheet. So there may be a discrepancy there. Again, this is why we need an audit. So if the Fed is taking tens of billions of dollars per day in mortgage-backed securities as good collateral, And there's been days when the Fed has taken over $10 billion in mortgage-backed securities as good collateral that supposedly the banks buy right back. But on the Fed's official balance sheet, they've sold off, I think, over $200 billion of mortgage-backed securities in the last year. And then a lot of that was reinvested into treasuries, I think. I don't know the exact amount offhand. 2 balance sheets. Yeah, there's multiple set of books. This is why we need an audit, real independent audit, which the Fed doesn't want. Okay, that's it for now. Everyone have a nice rest of your weekend.